have the topic is tech supporting the tech lever supporting the financial inclusion, and we have an interesting lineup here. So I'll just introduce quickly. We have Vishal from Softbank. Vishal is a director at Softbank Vision Fund. Prior to joining Softbank, Vishal was at TPG Capital, and prior to that, he was with Credit Suisse, Aberdeen, India, and London. His early career included time in Audex Group in Boston and at Procter and Gamble. Next, we have Haresh Vazirani from Aberdeen. Haresh is investment head at Aberdeen Standard Investments. He heads the firm's growth and Asian investing business. Haresh relocated to UK in October 18 after spending years in Hong Kong office, and he's been with Aberdeen since 2015. Then we have Chris from Saison, Saison Capital. Credit Saison is a Japanese financial company affiliated to Mizuho Financial Group. It's the third largest credit card issuer, over 20 million cardholders in Japan, and behind JCB and Visa Japan. Saison Capital is more of a CVC arm of Credit Saison, and Chris is one of the CEO partners. Welcome, Chris. Vikram is my founding partner at AI Ventures. It is an early stage fund based out of India, focusing on fintech and consumer categories. We have Apricot from Luxembourg. I mean, right now she's in UK, but based in Luxembourg. She's a graduate from Cambridge and Sleeps in Shanghai. She started her career at Aberdeen Asset Management again, and now works for Investing for Development CAV, a Luxembourg-based fund. She's a deputy CEO of I40, which is microfinance development fund based out of Luxembourg. Then we have Vishal from Verize, is an old friend of mine. So Verize is building India's first socially distributed full stack financial services platform for families in small town India. This is sweet and short intro. Then we have Satya from Project Hero. They book trained workers, work faster, more profitably, build a perfect team from the largest trained work pool, and they manage and get through insights on their day-to-day intentions and productivity. That's Project Hero for that. Then we have Hena from Vyas. Vyas is India's financial service destination for women, powered by education and communities. And we have Ritu from Ankur Capital. He's a founding partner there and is mostly focused on agriculture, healthcare in India, one of the topmost agri funds in India right now. I took some time to read the bios, but thank you so much, guys, for joining us today. It'll be a 1.5 hour session. Very private. We want everyone to be candid. Though normally we don't record our sessions, we wanted to record this session to put it out in a larger LP and GP club. And I think Yash will help us not fully moderate it. We want this discussion to be very free flowing between the membership here, but Yash will help us connect just make sure we don't deviate from the topic. And thank you so much, everyone, again. And over to you, Yash. You can go ahead, take it ahead.
Perfect. Thanks, everybody, for joining us. This is something we call the boardroom session. This is something that we modeled after the Chatham House rules that apply during more focused conversations on topics that usually happen in the educational circles in the UK. A lot of you guys are from there, so you might know about that particular format. What we felt was that there's a lot of lack of knowledge gap between investors and the operators in the space and the people in between trying to help accelerate the manner in which those investments can happen more sustainably, pun intended. But what we're looking to do over here largely is to have an open-ended conversation. It's like Dhruv mentioned, it's not something that is moderated as such. You don't have an audience to really speak to or give necessarily gyan to. It's more about learning for yourselves. LPs learning from VCs, VCs learning from operators, operators learning from the VCs and the LPs as well, helping the overall top-down capital allocation into spaces which are most relevant to this peer group, right? So we've done this over multiple iterations with, across the last 6 months or so now. And, something just we're fairly proud of is that it's resulted in a deal which has amounted to almost $25 to $30 million of raise that just came through the interaction that a potential investor had with a company in this space as well, right? The objective really is to not just have that conversation, but also to build rapport amongst like our peer group, like people who are relevantly interested in this conversation, and then see how this organically results in whatever you guys might be most interested in. So that's the quick background of this format. And quick introduction about myself. I used to work with 314 Capital for about 5 years. I left there as a principal very recently. I've joined a family office looking to invest into gaming investments, specifically across Southeast Asia and India as well. And, this session right now is around financial sustainability and financial inclusion, trying to really understand what the gaps are in terms of what potentially thought process and thesis development investments really drive versus what the operational level truths are, which emerge over a period of time of actually being there in the space and talking to the people who are most impacted by the kind of technology and products that are getting built today, right? We have 3 founders here today. We actually had another person joining us, but COVID is being COVID, and they have had to drop off because they were not in the right position to really speak. But we have Vishal, Satya, and Hena. And just to start things off, I would really like to get them to really take just 2 to 3 minutes to fundamentally explain what specifically are they really looking to solve, as opposed to what they've done, what they've achieved, and so on and so forth. We'll get to that over a period of time. But maybe we can start with Vishal and try to really understand what was previously being done, who was it targeted towards, and what you guys felt was really missing in the ecosystem today, where you guys have been able to come in and really solve crucial pain points for the kind of families that you're really going after today. Vishal?
So thanks, Yash. Hello, everyone. Good to be part of this conversation today. So essentially, to give a little bit of background, so I have been fortunate to be part of the internet ecosystem for almost 10 years now, more than 10 years. So I was lucky to be the first hire of Amazon India back in 2010 when Amit Agarwal hired me. And I've seen all the investment cycles in India. As I sometimes joke with my board members that I've seen more investment cycles than probably they have. Anyways, but one thing that I have seen is there are like a lot of, and I really love the topic, Yash, that you have. Like there are a lot of theses that kind of come in India, which primarily because something has worked in a developed market, and then over like 4 or 5 years, like everybody realized, oh shit, like that was actually the market is really, really different, right? And I think specifically in financial services, we are going to see that. So I was also the CBO of Lending Cart almost 3.5 years 3 years ago. So I was their chief business officer from their Series B to Series C before starting Werize. So to give you a background on what we do. So we are kind of a little bit of an antithesis of primarily whatever is going on as a popular narrative. So essentially what Verize is trying to build is the largest financial services brand for small towns and cities. So we divide India into 3 parts. One is your urban tier 1 cities where your Gen Z and millennials all focus on. And then you have the middle class people living in the tier 2 to tier 4 cities. And then you have the rural India, right? The tier 1 millennials, there is like a lot of rush from fintechs, from your all these private sector banks and insurance companies. Everybody is just piling on to literally 10% of India's population, which is around 50 million white-collar taxpayers, millennial Gen Z. And it's a large part of GDP. India's 50% of GDP comes from this segment of people. But then there is a middle class living in smaller cities. And then there is this rural poor. So all your microfinance and government focuses on the poor people, and maybe folks like Apricot will be able to relate to that there is a lot of focus from governments, India, abroad, to focus on the really poor people. But then there is the middle class, which is neither rich enough for the government, like rich enough for your private banks, and not poor enough for the government to take care. So what about them? So we are trying to build the largest financial services brand for them. So so these are the customers of government banks like your Punjab National Bank or SBI and your cooperative banks. For those people, they have a basic bank account, but they don't have any of the other financial services. So number one, we create financial products for them across lending, insurance, and savings. That's the one thing that we do. And the other thing that we do is these people need a lot more help. You can't sell to them digitally. So you will need to have a solid high-touch model. The problem with the high-touch model is if you open branches, then it's very costly. So what we have figured out is what LIC did, which was a network of trust. right? So we take these LIC agents, and there are these post office saving scheme agents, or people who are already employed in these banks, etc. And what we do is we have created a platform, and we bring them on to the technology platform. And the beauty of our platform is we do not have any of our feet on street. So we manage 10,000 plus such freelancers in 1,000 plus cities with no feet on street from our side. So that results in ability to provide the high touch without any expensive capital intensive investment in the manpower for managing these people. So essentially that's what we are trying to do. And from the thesis perspective, our view, Yash, is if you see lending, okay, like I was the CBO of Lending Card, and Vishal, you would have probably met all the fintechs. You are somebody from. There is no lending unicorn, right? Right? There's no lending unicorn. It's supposed to be like a freaking $1 trillion market, and so big and all that. Why? The simple reason is that if you go after the same tier 1 urban millennial market, the good customers are going to end up with the banks, because banks are not stupid, right? They are, like, maybe 6-7 years ago their tech was not that good, but they have caught up. And the primary thesis of digital lending when I joined Lending Card was like, in US and all, you have these digital lending companies who are raising a lot of money, blah blah blah. But the problem, the arbitrage that it's have in US was the banks still work on mainframes, so it's very hard for them to move to the new age tech platform, which makes it harder for them to give great customer experience. That arbitrage does not exist in India. The banks are pretty savvy. In fact, one of the investments that you guys made, which was Zeta, actually helped these banks become neobanks, right? So how would a fintech compete with a bank which has all the customers, like an HDFC and ICICI, which has all the customers, and their cost of capital is like 4 times lower than you. So you can't compete. So good customers go to banks, not so good customers come to fintechs, and hence the very high default rates, right? So one, lending is obviously a big part that everybody has to solve, which is what we kind of solve really well. So our focus was, like, don't go after this market, and that's the thesis problem. I think, Yash, I think the ecosystem probably will need to. I know it's a strong statement. Many will not like this, but from the fundamental perspective, a lot of dollars are going to the top of the market. Banks are going to become smarter, probably led by companies like Zeta, and who will help these banks become even smarter. And right. The middle income, smaller cities where the banks don't really care about that segment. The private sector banks, their unit economics of opening branches does not work. The unit economics of serving the middle class, lower middle class people does not work. So that's the segment that essentially, I think, as a thesis wise, should attract far more dollars than it does right now.
Right.
I know long answer, but
no, but just to quickly summarize what you're trying to do, because it's fairly interesting, right? Like, so you're trying to improve the efficiency with which trusted nodes can be leveraged to penetrate and distribute more effectively in areas where traditional financial services and fintech have not been able to do so, over the past couple of years. And you guys are leading the brigade with respect to figuring out specifically what works, because like you said, it's a high touch model, but it can't be a high expense model for it to be able to be a financial success. While also delivering the goods for the people and making it more efficient for them to be able to access it than traditional gold loans or traditional, other chit fund sort of schemes, et cetera, which are largely prevalent at 50% rates of interest or north of that primarily.
Maybe,
so very interesting. I'll get back to, how you're really making some fundamental changes in terms of the lives of these people, not just from the lending perspective, but also from investments and insurance and all the other financial products that you're really going after. But because you touched upon penetration and specifically going after this audience, right? I also want to get Satya to join in on this conversation and really talk about, okay, so, Vishal has really broken down tiers of India in terms of audiences. But Satya, you're going after that last year as well, but specifically in a very specific domain that is very difficult to formalize, because even within that domain, these guys are people who have very little technological infrastructure, right? So what sort of hacks have you been able to really bring to the table in terms of both operations and technology to specifically go after the kind of audience that you're going after, and also what that audience really is for the rest of the room to really understand? Satya, over to you.
Got it. Thanks, Yash. So hi everyone. Basically, I'm the founder and CEO of Project Hero. So Project Hero basically is, trying to kind of reimagine how 50 million plus construction workers find jobs, right? So right now, these 50 million plus construction workers who are there in India have to kind of find work through, informal channels like a labor contractor or the relatives or the middlemen. And when they do so, most of their profits and their daily wages are sucked up. They are not left with any safety net in terms of PF insurance and all that if something kind of goes wrong. And it doesn't also help that most of the labor contractors actually do workforce management on a piece of paper or WhatsApp. So there is no employment history or training history for these workers as well, right? So essentially, this is a class of audience which is, probably the second largest employer in the country. And people who are working in this industry, right, essentially have no system of record, right? So this is one of the largest audience that we are kind of going after. We are thinking that we can onboard these people onto our platform and then get them access to projects and jobs directly without a middleman in between. We can also kind of make sure that the payments and the wages flow through us, right? When we kind of do that, then the power or the balance of power actually shift from the middleman to the worker, right? So that's what we are kind of trying to do in a nutshell. So we started operations pretty recently, and we were running a general contracting business offline before that. So so all these things kind of came through the problems that we kind of experienced firsthand as contractors, right? So when it kind of struck me, I just kind of packed my bags and shifted in Gorakhpur. So so what Vishal was talking about, the kind of the kind of cities. So I have been living there for the last 3-4 months, so I know inside out what is the kind of human aspiration there and the penetration of various technologies. So from our perspective, right, so we are basically trying to kind of onboard workers through a channel route. So we have kind of come up with this hack, which is something that we called as hero partners. So these partners are basically enterprising young chaps who are living in villages, who are ex-construction workers and who want to kind of build their business, but they don't have jobs because of the COVID and everything. So we have kind of onboarded them and we told them that, look, you go out there in your community and you onboard as many construction workers as possible, right? So that has kind of worked really well for us. Through this channel, we have right now, within 90 or 100 days, we have onboarded 2.6 lakh construction workers onto our platform. And that number is kind of growing at a very, very rapid clip. My sense is that this channel is going to be very valuable for us as we start getting into other products apart from jobs, right? So from a thesis perspective, our thesis is very simple. First, create a system of record for this class of workers. Then you provide them employability related solutions. That has two factors. You train them, right, so that your workforce is differentiated. Second, you get them access to direct jobs. Once you have system of record, and secondly, once you have the employability structure, then you start leveraging the financial stack that can be built on top of it, right? So so that's how we are approaching a problem like this. Our approach is worker first approach. So we think that so we don't think and act like a B2B product, like a staffing product. We are thinking and building the product from the worker's lens. We feel that creating a profile which is system of record, again, like I said, access to jobs and trainings, and then access to financial systems like making sure that the ESI, PF cards are available on the worker's phone, access to payments via payment links that are getting sent to the contractors, and various saving products that can be built on top of it. So that's how we are approaching this at Project Hero. So
Right.
yeah.
So Satya, I mean, I for people living in India, especially, right? Like, I think we've all seen the plight of construction workers day in and day out, especially during the last year and a half, when a big chunk of this migratory workforce were out of jobs, which paid daily wages and had to really move on. And it's a challenge that everyone's seeing, but very few people are really able to understand and solve for, especially in a sustainable way. So like, kudos for you to take that on, and we'll explore some of the manners in which you're really going after this audience very quickly. But before that, we've spoken about tier 3 India, or like the next billion India, which is really tier 3 India. And let's take a step back to what is really happening in cities as well, right? a lot of women are really officially coming into the workforce. As we all might know, women have not been historically very participative in India's workforce. A lot of them are really coming into the formal employment and scheme of things. And what has still been a challenge, even for these women, fairly educated, earning great jobs on par with most of their male colleagues as well, is that they've traditionally still not have the right impetus and motivation and also knowledge and understanding to actually invest for themselves, manage their own wealth, take care of their own finances and truly be financially independent. And is that really a cause for financial inclusion as well? We really think that it is. And I think Hena also definitely believes in that, and would love to hear from Hena about, how she's really going after this space and what are her learnings and what she's really able to bring to the table for these women.
Awesome. Thanks. Thanks, Yash. You made the pitch for Basis already, and thank you for having me here as well. So hi everyone, I'm a co-founder of Basis. We're building India's FinServe destination focused on urban women, and our platform is powered by communities and education, right? So that's our kind of one-line pitch. The problem we're looking to solve is really, to what Yash mentioned, penetration of financial services amongst the urban population of women has been, dismally low. If we're looking at, percentage of stock market investors that are women, this is under 25%. 90+% of loans that are disbursed are to men. 90+% of credit cards in the market, if you're looking at, credit instruments, are, owned by men. Over 80% of women are either under or uninsured from a health and life insurance standpoint, right? So this is the massive gap and the opportunity that we are targeting through Basis. And in terms of how we're looking to solve this, right? So obviously from a legacy standpoint, FinServe, banking, etc., has defaulted to men. It has been what we say at Basis, a one-size-fits-all men approach, and just because historically men have been the owners of wealth, right? But that is obviously changing. Women are, there's global stats, women are adding around $5 trillion of wealth to the global pool. But for whatever reason, seem to get left out of, growing their wealth or protecting their wealth with the right insurance, or, complementing, achieving their financial goals with the right access to credit, right? And that's our space. The pain points, etc., or the trigger really to create Basis was driven off of my own pain points. So I've worked in fintech my entire career, starting in 2008. It's a very interesting time to have joined the workforce. I was on Wall Street in New York, building tech at Goldman after graduating from Penn with a degree in computer science. Built brokerage tech, focused a lot on emerging markets on that side of the world. Decided that India was where I wanted to be. The startup ecosystem, this was back in 2013-14, was nascent, exciting enough. I took a leap of faith, moved to Bangalore, joined EasyTap, who you might have heard of. It's in the mobile payment space. I was one of the first product management hires there. And then business school happened for me, right? So I, like any very diligent, applicant, I'd focused on everything that was needed to get into, my dream school, the essays and recommendation letters and GMAT and whatnot. And I ended up getting into my dream school. I got into Wharton, but, realized I hadn't planned to how I was going to pay for it. Right, $200,000 odd for a 20-something-year-old is not a joke, and I didn't want to take on large debt because I wanted to pursue entrepreneurship after that. Long story short, I liquidated whatever I'd saved in my 401k for retirement. Took some help from family, and took a small loan which I knew I could afford to pay back. Right, but that to me was that eye-opening moment as an adult, where I realized my male peers weren't kind of struggling with similar things, right? They would talk investments, they would talk about markets, do all of that, and I had about 7 years of in an income generating set of years where it just didn't strike me that I could invest, I could do this to achieve my financial goals. Moved back to India. I also had a brief stint with Square in SF building lending products for the Square Capital team. But yes, long-term plans of being and building in India hadn't changed. So moved back here, validated that I wasn't alone in these struggles, right? Interacted with over 500 women across urban India, tier 1, tier 2 cities, and saw that 9 out of 10 women were in the same boat, right? Like had access to money, whether their own income, through a business, inheritance, etc. But, beyond deposits and gold, maybe, the buck just stopped there. But there was this high intent, a strong desire to want to do something different with their money, right? And biggest gaps in the market really were around knowledge, which Yash you alluded to, trust, confidence, and relatability. And we've seen the stats, right? Even the new age fintech products, and Vishal, you alluded to how urban India is being targeted by new fintechs and banks and things like that. But if you look at the user base, we're talking 85+% of the user base being men. And even the user base that tracks women, the estimate is that over 2/3 of those accounts are, men managing accounts on behalf of spouses and daughters and sisters, etc. Right? And so that was a problem. And it's not that women don't. Arguably, women need these financial services and products even more so than men do, just in terms of how our financial lives play out, whether it's planning for longer retirements because of, longevity, whether it's looking at life events like a career break, which isn't really seen as a financial event, but it truly is, right? You're taking off a couple of years, and you're suddenly not generating an income. How do you plan for events like that? To even things like, healthcare costs are more for women, personal care costs are more for women. So not only do we, need to plan for, we need to spend more to be a woman, but also need that money to last us more. And obviously we've all heard of, gender pay gaps, etc. We just earn less for, similar jobs that we do. So like I said, arguably women need financial services products across investments to insurance, even credit, more so than men do. And anyway, so coming back to how we're solving this. So basis, from the very beginning, we knew we had to solve for those knowledge, confidence, and trust gaps first before kind of diving into creating financial recommendations and products for this audience. And so from the get-go, we've been community and education driven, contextual education, really understanding what women may care about. Behaviorally, women make financial decisions differently from how men do, and solving for that first, right? So an early experiment that we actually ran was we created a community where we didn't restrict who could join by gender. And while both men and women joined, we quickly saw that men just kind of took over, right? Women were there, but took a backseat and were more silent. And then we converted the community to be women only. And that's when we saw the floodgates just open. This was back in 2019 or so. That community grew to over 5,000 women very organically in a span of about 3 to 4 months. And, questions ranging from, what is a mutual fund? How do I invest in it? All the way to like, how do I get health insurance, not only for me, but for my parents and my in-laws, as well as discussing more sensitive life topics like divorce or death of a spouse, which disproportionately affect women more so than they do with men. And so communities, we knew were a critical step in, the first step of the journey for women to kind of get into this, feel comfortable, get their feet wet, and then, contextual education, of course, with both of these generating the engagement and, the awareness for this audience, and then eventually converting them to transacting customers. And our vision is to be this full stack financial services platform where we're offering not only curated recommendations, but also curated products. So envisioning, basis health insurance, where we're really curating health insurance plans, taking into account, health concerns and risks of women, right? Life insurance is another, product where there are gender specific nuances that aren't taken into account. Investments, of course, how women view risk is very different. Credit, again, massive opportunity for, to really innovate for women as borrowers. And this is what we're building, long-term vision, full stack FinServe for the women audience.
Right. Thanks, Hena. I think demographic focused financial products, through a productized and also a community-led model is something that's really taking off across multiple verticals. And, glad to see you doing that for something as valuable as 50% of the world, which can potentially benefit from something like this. So to take that demographic as a point of conversation as well, right? And take that in context of financial inclusion. I want to bring in perhaps Apricot and Ritu to share some thoughts around, being investors. You guys really have to figure out what demographics really require certain aspects of financial inclusion and how to prioritize some of them. And, how do you end up sort of choosing and prioritizing and really even figuring out what problems to specifically invest in that probably solve for the pain points of that demographic as well. So Ritu and Apricot, if could get some thoughts on from you guys on that will be great. But before that, I also want to again let everybody know that this is a conversation. I don't want to moderate this. I want everyone to come in and have these conversations with themselves and, interrupt if really required. I know there are a lot of people, but if there's something that you'd like to ask, something that you'd like to add on to, please do come in and share your thoughts as well. But Apricot and Ritu.
First of all, I'd just like to say it's been great hearing everybody's pitches today. Such interesting products, and I think you've all taken a lot of time defining the area that you're working with, defining your target markets. From my perspective, we've got a rather more defined mandate. We're a fund that was specifically set up to work in microfinance investments and with quite traditional microfinance institutions. However, what we're always looking to do is work in the areas where we perceive the needs to be highest, which means that we're spending an awful lot of time looking at the data from Findex. And we're always concentrating on countries as low down the HDI index as we can get. However, having listened to everyone's thoughts on this, I think quite a few interesting thoughts from my work to date, that certainly we always perceive this missing middle area, that actually there's a lot of products out to address. There's a lot of work done by development institutions, among which we would be included. And there's a lot of work that is done, of course, by NGOs targeting the very low income segments of the market. Meanwhile, I think it's very easy to perceive the profits the top end of the market, and therefore addressing emerging middle classes is always a very exciting segment and rich in models. I was also very struck by Hena's discussion on the gender perspective, because I think this is a message that we see across the globe, and working out how to incorporate better standards of financial inclusion for women will be very fundamental, particularly given the potential for growth that this market entails and the lack of services addressing them. So yeah, enjoyed hearing everything, and thought that there were very well thought out business ideas coming through.
Thank you. Ritu, any thoughts on this?
Yeah, sure. So I used to work for a company called Hindustan Unilever. And interestingly, they make you go sit in all sorts of random places, and you realize they're not so random. And you realize that, people spend money in all brackets and all segments of society. And when I used to work for them, their urban contribution to their P&L was much larger than their, let's call it the other India contribution. And every single person there was trying to sort of increase the other India contribution than the urban upper tier kind of thing. So you see demand, and you see consumption, and you see productive activity pretty close up, and realize that it's actually a large chunk of the pie. I think the challenge is that, how do you profitably build a business, right? If the ticket sizes are not very large. Right. And I think that's where all the digital stuff came into India, and allows, what Vishal was talking about. We look at it, there's a top 100 million, there's a billion in the middle, and there's probably 100 million or 150 million at the bottom, which is really hard to serve. And that's a bit of a, much more about, government systems, etc. that do. But there's a very, very large chunk in the middle. And the problem always was that, you can't carry a 10 rupee thing to somebody who's, the expenditure or the production was never large enough to do the cost. But the digital tools, etc., that came in sort of helps, unpack and be able to deliver many services across sectors that unlocks this segment. And that's pretty much how we look at it, right? And I think it's a complete misnomer to say that this is one segment, like everybody else and anybody else. It's not one bucket. And any business has to figure out their customers. And if they can't figure out their customers and who they are, it's not going to work, right? I mean, you've got to get the fit for the particular customer that you're targeting over here. To say that 1 billion people are all exactly the same is definitely not true. You've got to still figure out what the segments in it here are. And while you may have many tools at your disposal on how to actually build businesses and address businesses here, you've got to target a customer just the way that you would. Doesn't matter if you're building a business in the US or you're building a business for the top 100 million or this is the segment, the next billion that we call it, as a segment that you're sort of building. It to be laser focused. You've got to figure out the pain points. You've got to, like folks have been talking here. So I think we see this as a big chunk. It is the tip of the iceberg, and the tools are there. Now it's for people to build the products and the customer segments and sort of get to them, essentially.
Right. So nuanced problems of the demographics globally are what technology is not just able to identify but immediately target, like arise and problem solve and target and expand and scale. And technology really plays a part in terms of identification of these problems as well. Top-down capital movement really happens through a lot of analysis, a lot of data, a lot of information, and sensitivity to that, aligning with the right thesis and how that thesis evolves very quickly is fairly important. So I'll have this conversation open up to Vishal, Haresh, Chris, and Vikram as well. Anybody who'd like to chime in and really help us understand at the organizations that you're at, how the right kind of data really helps you evolve your thesis around investments itself. Anybody?
Yeah, I can maybe start. Hi, and nice to meet you all. Thanks for hosting me. So yes, I think what people said here is very relevant, and I think at Softbank, right, when we talk about investments, and I'm sure most of the funds, especially on the late side, they're all focused on the macro and what the outcome can be, right? At the end of the day, the first thing that we are all looking at is, are we solving a big problem? Are we going after a large TAM? Is if this works, because see, at the end of the day, tech investing or VC investing, you're anyway dealing with a lot of it's not like private equity where it's more stable business. You have a certain downside already protected. This is more of you're taking a bet that if this works out, then this should be a multi-bagger. That's the kind of a thinking you're coming through. So by definition, I think what Ritu said earlier as well, right, that you have to have that sustainable model. You need to have those revenue streams or certain segments who can actually pay and have that product portfolio. And so those are some of the things: product market fit, unit economics, some of what problem you're really solving. It becomes very, very relevant. And that is probably one of the reasons why, let's say, you don't see many people going after the lower strata just because of the paying capacity and ability to reach them, solve problems for them, and probably make money out of it at the same time. So that's a conundrum which is happening. I would actually say 2-3 things that we should maybe as a group talk about, or at least acknowledge that I think UPI has been a big game changer in India, right? I mean, payments, the way whole technique, if you see the whole digital movement on the payment side, that's been UPI driven completely. I think that was a great initiative from the government. They did a fantastic job. I think the only qualm from my side is they've made the MDR 0, which actually then in some way also kills the whole initiative, because now no one wants to invest in it. I mean, you talk to banks, you talk to fintechs, you talk to customers, and everyone I think they want to grow it, but unfortunately they are losing money on every transaction. So by definition, it's at some point in time, there's only so much money you are ready to burn. So that's one thing. Second, again, very interesting, and I don't know how many of you know or have spent time on. There's another protocol called OCEN, Open Credit Enablement Network, and that's a very, very interesting piece of work that again, iSpirit and these guys are doing, right? I mean, we talked about, and for this topic particularly, I think that's a very, very relevant vision. The whole idea is, can we make a small ticket, I don't know, 100, 500, 1,000 rupee loan without incurring the kind of cost that today lending companies are getting, and get the same kind of information, underwriting, and all of that can be done seamlessly like a UPI. So think of a UPI for payment, and then think of it as similar experience on the credit side for taking loans at the click of a button, repaying, monitoring loans and repaying. So those are some of the initiatives which I strongly believe could really change the game on the whole lending side. I think Vishal mentioned, right, lending has not had a unicorn and those kind of things, and we are obsessed with unicorns and all the investment that the sector attracts. Unfortunately, COVID has been a tailwind for all tech sectors except fintech, unfortunately, right? Maybe payments has benefited, but lending definitely hasn't. It's been really unfortunate. Wave one, I think that many companies were getting out of wave one, wave two came, and now everyone was like really struggling and keeping their fingers crossed that wave three shouldn't be bad, because now I don't know if the balance sheets can support. A lot of people have really struggled over the last 2 years. Yeah, I think, and which is the reason why you didn't see investments coming in, because no one knew what to expect, where to draw the line. Is it going to be 3 months pain, 6 months pain? You need to have that predictability in financial services, especially lending, to be able to put money behind it.
Absolutely. So technology as an infrastructure being built by government becomes extremely powerful levers for investors to really back, as long as they allow for the right kind of margins for it to become incrementally innovative. Very well pointed out, Vishal. Like that's something that you can really bank on at the very top, right? But like investments also happen at the ground level, and innovation and problem identification also happens at the ground level. And Vikram is very close to the action at ATI Ventures, and a prolific mind with respect to fintech investing. So want to get your thoughts around, again, using technology, but for early stage investing into financial services, specifically, trying to identify what thesis is really to go after, Vikram.
Thanks. So by way of introduction, I'm a former fintech founder. Started my career in Wall Street in New York, and did my first venture in '99. Very, very early. So I've been kind of investing, building mobile internet companies since '99, since the advent pretty much of the mobile internet. And Hena, we know each other. So interestingly, I was also a seed investor in EasyTap as an angel. I did not realize you were there as the first product manager. So, for me, financial inclusion really, the way I looked at it is that how do you formalize the economy first, right? It's really about, if everybody has a bank account, everybody has a track record, and then you can give them some money and you can sort of layer the entire economy with credit. That's basically the real goal that we are looking at here, delivering credit to every corner of India. And today you can do it with every phone that is there. So that reality becomes obvious. The way I have looked at it is more from, I don't think, Vishal, to your point, that people at the very bottom need help. My point is, I think if you make it really easy, if your customers can use WhatsApp to send messages, they should be able to do banking on the phone. If they're able to use PhonePe and Google Pay, then every banking product should be that easy. So my point is radical convenience, simplicity, super fast UX. And it was very clear that the Finnacles of the world are not going to be able to do that, right? So then therefore Vishal has a thesis of going and backing Zeta, which can replace and build a whole new banking stack. I look at it slightly differently, because I think changing the entire banking stack midway for a large bank is like trying to change the engine while you're flying. It's not going to happen, not that easily. Of course, it's worthwhile, but it's a difficult endeavor. I thought, can we do it component-wise? So I broke down banking into every product, every mile, first mile, middle mile, last mile. That's how I did it. So thematically, I've been sort of investing behind this space. So EasyDab was my first investment, try to eliminate cash at the point of delivery. Then I'm the seed investor in M2P, the second check in Slice, Kodo, which is a corporate card company. Very recently, we've done about a year ago, a digital fraud management company called Defense. These were a whole bunch of these companies. All of these companies are designed fundamentally to remove cash with great efficiency. And also more and more, I'm beginning to realize, can we deliver credit sachet size? That's the way Unilever did with the shampoo. So I would like to correct Vishal and both the Vishals. There is a unicorn in lending, it's called Slice. So it became a unicorn last December. And I've been an investor in Slice since 2017. What intrigued me about that opportunity was that he was trying to underwrite students, right? Which seemed like a futile exercise. Everybody was like, why are you doing that, blah, blah, blah. So I met Rajan and I heard him out and I thought he had a certain logic without going into too much detail about what he was doing. So I said, okay, I'll invest in you personally. A year or so later, it just happened, I was in Brazil and I happened to meet the founder of Nubank just around his Series A, and he spent about 2 hours with me explaining his thesis. I worked in Brazil briefly, so I understand that economy a little bit. And he was actually, the interesting thing is Brazil had a 70% credit penetration. So it's not that he was going into an sort of underpenetrated market like India, which has no credit card penetration. He said these people are suffering at the hands of the banks. So I'm like a Robin Hood saving these guys with a better product, more transparency, all of that. So when I came back, I was visiting Rajan and we were chatting. I said, why don't we launch a credit card? And he said, yeah, it was crazy enough to lend to these people. Why not do a card? So then we set about looking for a card platform and how do we do this? Obviously the banks are very difficult to work with. And so we zeroed on M2P. That's how I got to be the first check in M2P as well. Cut a long story short, what transformed Slice from being almost like an also-ran company for a while to something magical last year was obviously he woke up one day, he said, listen, I'm just going to build this for myself. I really don't care who this customer is. We are all 27, 28-year-olds. My average customer age is 27, 28-year-olds. I'm not going to listen to no VCs. I'm not going to listen to no designers. I will design this myself on first principles. We will put everything that we love in this product. Everything that has worked, we will add. Everything that has not worked, we will dump without bias. And the other thing that he did was he started to offer 2,000 rupee credit lines. He said, I can do it. A bank can't do it. Their cost structure is too high. And the clever thing about offering a 2,000 rupee credit line to a new to credit person is, if you give it to 10 people, you are lending out 20,000 rupees. If 10% of them default, it costs you 2,000 rupees to figure out, right? The rest of them who are actually credit worthy to begin with. And so he's built this whole dynamic credit profile. Today, 40% of his customer base is new to credit. And his default rates, by the way, because I'm privy to the numbers, are lower than SBI cards, lower than ICICI Bank, HDFC. So he's done a remarkable job because of this dynamic credit that he's building. And I've never seen a company grow this fast. This company has grown like 12 times in the last 12 months. This is before the Tiger investment, and I have no doubt. I basically believe this guy will exceed SBI cards. Obviously, I'm biased, but the view we've taken is that if you really want to deliver financial inclusion, you cannot do it to the existing stack, right? So maybe Zeta will go ahead and over time build some of these things, but in the interim period, we're taking a brands and a real strategy. So we choose a segment. We said, okay, we don't really care how small that niche looks. India is a very interesting economy now, that even a niche can become very large. So as a seed investor, we have that benefit where we can go in and we can back a company, and maybe it'll become big enough that maybe one day, Vishal would look at it or somebody else would look at it. But we are very patient to that extent. And so far, I have never had a problem of market sizing. I've been writing checks to startups since 2007 as an angel. Never had a company fail because the market was not large enough. That is a really interesting part here. The economy just keeps deepening, the digital adoption keeps happening. And particularly in fintech, I mean, it's been amazing for us. We've seen companies grow 30x in the last 2 years, just the top line or the revenue base. And I think it'll just keep happening because now the bottom layer is starting to come in. That's the general sense I'm getting. So in a nutshell, what I'm saying is as the rupee is getting digital, right? We need to, as we invest in technology, we want to make sure this is super efficient. So for example, an unwritten rule for all my startups is that you have to onboard under 3 minutes. Very clear. So when I invest, maybe you're not doing that, that's fine, but we'll help you get there. So I've also seeded, for example, a company called Saison, which is a digital KYC company. That was their premise, that we would onboard everybody within minutes because banks were taking weeks. So now they are powering everything for HDFC, ICICI Bank, and so on. So taking a component by component approach on foundational technologies and speeding up the velocity of money has actually worked nicely for us. That's what we've been working on. That's what we keep doing again and again.
Interesting. Vikram, you spoke about the infrastructure that goes into dispersing credit across multiple demographics and how that is really changing the lives of people in India and the market for each of those sets of people or demographics or subsets of people being disparate, but just as relevant and just as large. Chris has been doing this, across the APAC region and in India as well through Credit Saison, and having gone through multiple modularities of credit, right? Want to understand from you both with respect to how do you really create the right kind of credit frameworks, and also how that infrastructure has changed over a period of time across multiple geographies, and what some of those learnings could be for us.
Yeah, maybe just to give some more context on my background. So the first company that I ever started was a microfinancing organization in the Philippines, where we were essentially lending sachet loans to tier 3 cities in the Philippines, as well as indigenous tribes. So really bottom of the pyramid. And this was in 2008. So pre-smartphones available in the Philippines. So it was a very different era. Everything was done on pen and paper. And then just before joining Saison Capital, my previous role was again in the Philippines. I was heading financial services for Grab in the Philippines, where I essentially got to do something similar, somewhat different target audience, but this time in a more scalable manner. So I did get to see firsthand how technology really significantly improves scale, as well as reduce friction when it comes to onboarding customers in the same market, but almost a decade apart. And so currently in Credit Saison, we have 3 asset classes that we look at. So one, we have a fund of funds mandate. So we invest in emerging managers around the world, mostly focused on emerging markets. We also have a private debt mandate. So we're probably one of the largest institutional debt providers in Southeast Asia and India. So most of the larger lending fintech companies will probably have us as one of their debt providers. And then lastly, I think what makes us unique from most other funds of a similar profile is we do have a direct investment seed portfolio as well. So we invest ridiculously early, pre-seed or seed, in founders in emerging markets, mostly focused on fintech as well as e-commerce. And that's where we have about 40 portfolio companies now globally in emerging markets in that we have invested in at the seed or pre-seed stage. So typically, when it comes to risk management, I think I broadly agree that the next opportunity in lending specifically is for tier 2, tier 3 cities, and so on mid to bottom of the pyramid. I do think it's really difficult to completely automate that process. I do think feet on the ground is important, because even if you have tech, feet on the ground still solves for risk, as well as education, right? I think these two things are harder to solve using tech for that customer segment. And then the interesting thing there is this then looks very different across different markets, and it's not something that you can easily take from one market, how it's done, and then copy it to a different market, because every market from mid to bottom of the pyramid has a different level of education, different way that you should approach the education, different culture as well. So you essentially end up having two customer segments that you're trying to help. So one is the actual feet on the ground, the agent. They could be a freelancer, they could be an employee, but either way you want to incentivize them a certain way, while also training them a certain way, and making sure that they are not predatory or taking advantage of their position, right? That's very important. Then the other customer segment that you need to risk manage for is the end customer. Yeah, so I do think it's quite interesting problem to solve. And I was hearing the founders speak. I was actually quite curious about how you think this could, what would be a good solution to scaling feet on the ground operations in India, right? And what are the bottlenecks to doing so, especially when it comes to risk management as well as for like education, which is very important.
Sorry, Chris, are you asking me?
Yeah, I think this question is fairly relevant to Vishal and Satya.
Yeah, I think for you and Satya is quite relevant.
Yeah, sure. So essentially, yeah, I completely, agree, Chris. You put it very relevantly that in our segment, especially the middle India, right? Not only lending, the other products are like too complicated. I agree with Vikram. Make things very easy. Yes, if people can use WhatsApp, they can use probably banking products, probably they can use UPI, they can use payment. But when it comes to complicated products, right, like taking a large loan, let's say a $2,000 loan for their mother's treatment, or taking buying an insurance product, or investing money, it's not just about, it's not a nice experience that works for the tier. Is the largest, and you guys are going to see how successful it's going to be. It's frankly a shitty product. It gives like a very bad IRR, right? It's called insurance. It's basically a saving product, and the reason it sells is because for the first year, the agent that is selling it gets 40%, and next year 15, and then 5 and 5 for life, right? And like if you as an agent like sell enough policies, you can retire. So by building a great distribution, Government of India has managed to take money of billions of dollars from the pockets of people, right, and give them an okay product. It does not really have an insurance, right? It's like insurance component is so small, right? So for us, LIC is the inspiration, right? Like how do you use this network of trust to sell financial services and service these customers? So the right way in Middle India is to do the phygital manner and build this army of freelancers, but you cannot do the LIC way, because LIC took like 60-70 years to reach where they are. They built city by city, they invested in branches, they have like 3.5 million agents that they had to build branch by branch. Every small village and city in India has an LIC office and a branch. That's too slow. Our approach was build the tech platform. And we have thousands of these freelancers who are LIC agents, post office agents, employees of government banks, because our customers all bank with government banks, so cooperative banks, right? And our customers are middle class people, like your teachers, people working in railway, people working in, the kind of employees of HUL in small cities, right? Like people earning $15,000, like distributors of HUL or PNG, those kind of people, the real middle class of India. And for those people, they want to work with somebody they trust. Yes, you should give them a sleek vernacular app, but if you want to take their money out, you need somebody they trust, right? So the problem that we are solving is how do we, and I really like the way Chris put it, we have two customers. One is these freelancers, which we have to onboard and manage their life cycle through the platform without having any feet on street, and managing these customers. And numbers have been phenomenal. So in just 2.5 years, we are what, $6.5 million revenue run rate right now. We are we became operationally profitable like 6 months ago. That too, despite the COVID waves that we have seen. I'm not bullshitting. We have less than 0.5% default rate. Our write-off on more than what, $20 million book is less than $50,000. And I've been on record, like you can see all the, to the journalists and all that, right? And Yash is a previous investor from 314. And the reason is multiple fold. One, these people, these freelancers are paid, in case of lending products, are paid only on default. So they will make sure that they will not give us the bad customers in first place. Second, we use these freelancers to get the data for the entire family. So we underwrite the families. So we take the bank statements of the entire family, their property papers, and also it gives us a lot of data. So the NPs are directly proportional to the data, right? So using these freelancers who already have a network of trust, we are able to get things like property papers and their agriculture property papers and their, like, for the entire families, stuff that we need, right? And these guys put it into the system, right, on the behalf of the customers, and the bank statements and all that goes into our machine learning models for the default rates. And finally, these people help us with collection also wherever needed, right? And then because lending is working and our unit economics are really solid, and we are able to cross-sell insurance, because these people have never bought health or life insurance in their life. They have only bought LIC, which is not really an insurance. So we created like unique products, like we have a cancer kind of insurance, or like a dengue malaria insurance, and your hospitalization insurance and life insurance that these people have never bought. And now we are launching a neo bank, and we are launching a credit card also, because this customer has zero penetration of credit cards. Like Slice is going after the segment like primarily your millennials and all, which also has a lot of new to credit customers. And I really agree with your point that even the top tier 1 millennial Gen Z market is large enough for a lot of people to play. Though our thesis is like banks are going to win in long term. That's the thesis that we have. And there's too much competition, very hard to make money in that. But this is a segment which is prime for disruption, but needs the right way of right products, right distribution, where the unit economics works. That's the way we build this business. And I have been into like real money burning business. I was in Amazon, where the money, they don't even care, like especially in India, there I was in Souk.com, which was in Dubai, Vishal, I think you were not in Softbank, but we pitched hard to them. You guys, when doing the Series D there, where we were burning like a $10 million a month kind of burn rates, right? Souk, for those who don't know, was the e-commerce, biggest e-commerce player in Middle East. Now it's the Amazon Middle East. So what I've realized over the last 10 years is, if you want to build a generational company, solve the unit economics right from the first go, which means go after the not so competitive segment. It's going to be harder, build all the rails, which in our case was like build the unique product. So we have like a suite of 6 to 7 products that are customized, built by us, right? So we can't like go to a bank and just offer these products. So we have to create our own products across lending, insurance, and savings. Second, we have to build our own distribution and the tech stack. And once these 2 things work together, and obviously the risk management, these 3 things work, the numbers that come out are like really good. We are like quadrupling every year at this rate. Like we grew almost 10x in last 1 year. And now we are doing like 15% month on month. EBITDA is like just 6 months away from us. And and as I think another thing that we have seen is the markets are markets, right? So they are not going to be very happy with the company that grows a lot of money. So if you want to build a sustainable company that really markets are also going to like, build a solid unit economics business. So in summary, I have a very different thesis from what you have, Vikram. Right? So
Vishal, you mentioned trust, right? Like trust was the first bridge that you really had to cross, and you did that through the fleet on street that you were able to curate, right? Like the LIC agent. But Satya and Hena, they're solving for trust in multiple different ways, either through community or directly solving for the most immediate pain point that the demographic might have. But is trust enough to really scale the unit economics that you really talk about? Like, or is it really able to scale the kind of financial inclusion that can be penetrated across multiple different places? So
it's a multiple thing. Sorry, should I answer or you ask me? Yeah.
I'd like to understand from Satya and Hena as well about how this is sort of relevant to their products.
Yeah. So I think in our particular case, I think trust was very, very important. So we have to be kind of cognizant of the fact that the audience that we are kind of dealing with, have been kind of cheated, of various rights and wages and everything for, God knows how many years. So, so for them, it was extremely important to kind of trust the person, and that's the starting point. So we actually kind of went ahead and opened our first operational office, in Gorakhpur and UP, where, I kind of set that up, interacted with a lot of people there. So, so that is the starting point of any transaction, any relationship for these people. And once you have their trust, you can kind of go deeper with that. Plus, I think, I really agree to, Vikram's point that, these guys not kind of coming onto the banking bandwagon. For me, it's not a tech literacy problem, right? That's kind of at least what I kind of learned from our personal experiments that we kind of ran and showed them the UX and everything. So, it's more around, it's a design problem than, it's a tech literacy problem is what I feel. Most of these people actually, if you look at their phones, and I'm talking, I think a layer below to what kind of Vishal is, catering to. These are, 9,000, 8,000 rupees monthly income groups. Most of them have smartphones. 85% of our 2.5 lakh workers now have smartphones. These are 6,000 to 7,000 rupees smartphones. Most of the apps on their phones are, your Facebooks, WhatsApps, YouTube, the standard preloaded apps that come. Apart from that, then, like a TikTok clones that are there in the country. So, and one thing that, we have to kind of consider that, we initially had thought it will be slightly difficult for these people to create their own profiles and enter the data manually and all that. What we kind of realized was that they were actually, using audio notes and chatting basic messages on WhatsApp, and also creating their own detailed profile in Facebook, right? So, so I think, if a product is designed, which is kind of simple enough and coming through the right trust channels, it will definitely be well accepted. And I think our numbers kind of have proven, that experiment, right? One of the other things that I think, what we are trying to do, so we are not, technically calling these partners as fleet on street people. Our model is going to be slightly similar to, let's say, what maybe a Misho or, city malls have done. So it is more like a reseller model than, let's say, a fleet on street salesman type of a model, right? So that is something that, we are kind of very bullish about. So these are the people in their own communities. They are able to kind of onboard people much faster. The level of trust and control is way, way higher, right? So, that is something that I think Vishal also spoke about. So, so that's how we are, I think, doing it at Project Hero.
Right. Satya, so to summarize, right, like, and I think this is a nuance to what Vishal was also talking about. It's incentivized nodes of trust, right? Like the nodes of trust, if they're well incentivized, they're able to be, explored across multiple different regions and multiple different geographies, right? And Hena is taking a slightly different approach towards building that trust, and that's through the community approach. Is this largely a digital community? Do you think this expands over time? How does that really, like, what's the conversion rate like from the community to really people adopting Basis as a product is something that I think we'd all love to understand.
Yeah. So, just to build upon what everyone else is saying, right? I mean, FinServe, FinTech are all businesses of trust at the end of the day. For us, yes, communities was a way of building that with this, this market of women that are completely underserved otherwise. In fact, anecdotally, we hear stories from our community where, women go to, financial advisors and absolutely don't trust what they're saying because they're being pushed products that, are probably being advised without taking their needs into account, things like that. And building that trust obviously is a key step. And what we've also seen with women as a demographic is that they tend to be really loyal, right? But in order to build that loyalty, you need to build that trust. Like women tend to shop around less, right? Like if this platform works for me, I'm sticking with it. Honestly, I have no time to be like shopping around for, health insurance on like 10 different portals or whatever it is, right? So that was kind of our key focus in the first couple of years after we launched, is that we wanted Basis to be that top of mind brand, that top of mind platform where women just kind of blindly come to every time they're in the market for a financial product or a financial service. And the value of building this trust is, just this cross-selling, right? Today I come to Basis to get advice on like what to invest into. Tomorrow I stumble upon something crypto and I'm like, okay, what is the Basis community talking about? And then I'm in the market for health insurance, a home loan, whatever it may be, right, across the life cycle of this customer. So it directly translates to high LTV, more ARPU, etc. In terms of numbers, so we're now starting transactions on our platform, but what we do pulse checks with our community. Over 60% of women have started investing after getting on Basis, right? These could be mutual funds, stocks, you name it, and that's why that engagement to transaction model works really well. It is a relationship-based approach. We're not trying to make it transactional, like you come on board, buy an insurance policy, and then you're out the door, and then we have to kind of reacquire you, etc., for other things. But the community kind of builds that continuity as you're sort of going through different stages in your life and many different financial products through that course.
Right, perfect. Hena, thanks for that. I want to take a step back and try to understand from Haresh and perhaps from the others on the conversation as well. A lot of financial inclusion capital flow is driven by top-down decisions at very large organizations. But the problem statements that are really coming through today are very nuanced and at the ground level. And is there a discrepancy or a lag between the thesis actually hitting the market more than the product market fit actually happening and taking shape? And how do you guys keep up? And how do you guys actually are able to provide what is the promise of a financial inclusion based investment through the measures that you do take? Haresh, any thoughts on this?
Yeah, very interesting. And first of all, I think thank you so much for everybody to share their views. Really interesting to hear from the entrepreneurs and investors alike. I think it's very deep and nuanced in terms of understanding. So glad to hear the thoughts. I think from our perspective, we tend to do predominantly fund investments in India. So we've been investing in India since 2006 and have more than a dozen fund relationships across VC and PE. We've done a few direct investments, but nothing compared to what we've done here in Europe. And I think one of the segments in sort of financial inclusion that we sort of tapped on was something to what Vishal was talking about earlier as well as on the freelancer side of things. So I think in Europe, it's slightly different problem that you try to solve in terms of inclusion is, can you provide freelancers the same level of service that banks provide to enterprises, for example? So that's a space that we've recently gone into. But in terms of your questions on lag, I think it's pretty valid. The way we would look at investing is that the first step of investment for us, at least when we're allocating capital, let's say for India, is to see what kind of investments have the fund managers made and what have those worked or not. So I think that ends up being that there does tend to be a lag, but we don't think that lag tends to be as long as it used to be. So for example, in 2006 or 7, when somebody made an investment, it took 5 years to get to a certain scale where it would raise a future round and the company would get to a certain scale. I think that has changed completely. And it could be different investments, or it could just be the scale of adoption or people willing to pay for services. So the monetization, particularly through COVID, has become very, very good. So I think things are changing and we are sort of evolving our model as well as we look at companies. In the past, we used to wait for quarterly reports for things to come through and us to analyze data on what works and what doesn't. Whereas now we've got systems on our own and we crunch data looking at companies, what our sort of managers have backed and what has worked out and what's not. So I think, yes, there is still a lag and there's still something to work on, but I think that has gone down from a 2-year lag to probably a 2 quarters lag or a 3 quarters lag. But we do see themes play and fundamentally, for example, financial inclusion that we're talking about today is not a 1-year problem. It's not a 5-year problem. It is probably a 10-year problem. And being a civil engineer and worked on construction side, I totally see how Satya is trying to solve that and why it needs to be solved. I think with all due credit to Vishal and Hena, they are solving a problem for people who can afford to have that problem. Whereas in case of Satya's position, having worked in the Middle East and having seen the plight of those construction workers, I think there's very different problem to be solved. And I think it's very heartening to see all three being solved, but it's very interesting how they are being attacked in different ways.
Absolutely. And I think an important theme that is sort of arising from a lot of these conversations is the potential to build that trust, solve for key financial inclusion problems, but then to make it very sustainable for investors to come in by upselling a whole bunch of financial products, which is driven by the kind of proliferation of public funded technology that's really come to the ranks, right? And that's making this space so much more feasible. And I think it's interesting to get so many different perspectives. And India is really leveraging everything that's coming in through Bombay, Bangalore, Gorakhpur, and everywhere else. I really want to try to understand from folks who are outside from India as well, Apricot and Chris, what do you think are learnings that potentially our investors and let's say our founders here, our operators, can potentially leverage from some of the nuances that you've seen that operators or maybe even investors have been privy to through their experiences outside India?
Yes, I just wanted to add. Sorry,
Yeah,
I just wanted to add, that we've talked about financial inclusion, and we've talked about financial inclusion in terms of a person, right? Basically, as a person on a personal level. But I think that there is also financial inclusion of, businesses and supply chains here, right? Which is actually a very interesting and exciting proposition that you're seeing play out as the digitization of these supply chains happen, to be lending and offering other insurance products, etc., in conjunction with being a vertical player. So in many ways, Satya is a vertical player, right? And as he goes along, that opportunity is also something that is a financial inclusion opportunity that we should be thinking about. Sorry to interrupt, Apricot. Over to you.
No, absolutely. I just wanted to actually build a bit on what Haresh had previously been saying about delays and mandates, because I think it's very interesting that investors who've traditionally invested in quite classical models are realizing that these classical models are inevitably adapting, and this means that investment mandates are changing. And of course, I think people are very aware of the speed that the investment universe is changing. And this means I also have the perception that the lag is decreasing. I also think that financial inclusion in particular is an extremely well developed area of the impact investment space, which probably means that people are more open to different models than they may be in the areas of impact investment that are perhaps less developed, and people have clear metrics and ways of assessing them, which again stands people looking to raise funds in perhaps easier stead than with some of the more novel environmental models, for instance, that we've been seeing of late. Moving on to lessons that I would view from the rest of the world. I mean, it's interesting, as I think has come out of all the discussions, is this mix between the absolutely local level that you need to understand to have successful business models, compared with this quite sophisticated macro infrastructure. And I think this stands to play in every geography in which we've invested. It's been very interesting getting the perspective on India in this regard. So of course, I think it's the local context that needs to be taken into account, but the innovations that we see across the globe. I did my MBA in Shanghai, and of course, I think there's a lot of interesting sharings between the two geographies, but also we were doing some trips recently to Kenya, and all the models that you see arising in Kenya in view of their mobile payment models that are really specifically designed for bottom of the pyramid produce, in my mind, interesting learnings in a lot of contexts.
Thanks for that. Chris, any thoughts on this?
Yeah, I think it's hard to take something from a different market and try to see how it applies to India, especially for the mid to bottom of the permit segment, because I think that segment and the behavioral patterns of that segment really differs across different markets. So I think the most important risk management approach is just to collect as much data that's possible, and then sort of build up your own internal data set over time, right? But I do agree with what Vishal said, which is particularly for lending, it's really important to have healthy economics, and you don't actually, to the point earlier about whether there's a unicorn in the lending space, you don't actually need to be a unicorn in the lending space to be a significant profit generating business in the lending space just because of the margins, right? So all you need is to make the margins work out. I think that's a mixture of having the right frameworks for the right profiles. So I think sort of collecting that data and then building internal profiles of the customer segment is important. And then the other side of the equation is also building up the debt capital side of the business, which I think having the right debt capital partners is really important, so that you also fit, learn over time to fit the risk frameworks of different debt capital partners, different structures that they are comfortable with, so that over time they are comfortable with your data sets and they are able to deploy more capital into your portfolio, right? And then that part of the equation doesn't become a bottleneck to scaling over time. So yeah, basically iterate, collect the right profiles, data sets, feedback from debt capital market players so that they buy into your model, and then I think that allows you to scale over time.
Interesting. Guys, a lot of the investors here have fairly large portfolio companies. They're at various levels of scale. And a lot of these companies at the grounds level, they're either looking for a lot of support or beyond investments, or potentially are creating some phenomenal products, be it from a technology or a process perspective, that has potential for transference and sharing as well. Or more aspects beyond that. So I know Vishal, you guys have such a large portfolio and there's a lot of intermix of value from that perspective, but like the others as well, right? Like I just want to understand from you guys, have you guys really thought about the role that you can potentially play in supporting these guys, but also supporting potentially other portfolio companies or other companies that also will benefit from these sort of innovations, and what is the best manner in which to do these things?
Maybe I can go first. I think obviously, look, creating value, knowledge transfer, that's the usual pitch which we anyway do, right? I mean, frankly, any new entrepreneur that we meet, that's one of the pitches, right? That look, you have the whole portfolio as your first customers, or at least cross-sell or upsell. That's definitely not just India, globally as well. Right? And you'll see that across many of our portfolios that we've actually introduced them to multiple of our portfolio companies globally, and helping them expand. And Zeta is like a classic example. I mean, Bhavin, he's a billionaire himself. He didn't need capital per se, right? The whole idea he took our investment was he wanted to expand globally, and we are helping him go to US and other markets. That's the whole thesis behind that. Similarly, I think look, knowledge sharing, obviously we are very open, we've encouraged, and I'm in touch with most of the founders. In fact, I mean, sorry, I missed Slice Unicorn. Rajan is a good friend, so Rajan, Madhusudan, all of them, right? I'm in touch with most of them, most of the entrepreneurs in the fintech space, and that's the whole idea, like how we can scale up faster, how we can do things which are there, and look, maybe I have to think more about how I can contribute personally, but that's something as a fund and an organization, we've always been open in introducing and meeting or sharing knowledge. And I'll let others also answer, and I'll come back. I wanted to also touch. I know we're out of time, but just a couple of risks on the whole inclusion side as to what we've not covered and what could be the concerns that we should also be aware in this space.
I think yes, just answering questions. So from our perspective, it's quite simple. So I mean, I wouldn't feel shy to reach out to anybody, and that should be vice versa. That if you think there's a connect you need on a company or on a VC or on a PE, then that's the easiest way to do it.
So 4 years ago, I noticed there were two kinds of founders who were emerging. There were these people from Bangalore, they were technologists who want to disrupt finance. And there were bankers who said, well, things need to improve. We want to build tech companies. And the banks were actually interested in partnering with fintechs, but they came from two different universes. I kind of straddled both of them. So I was personally arranging meetings, whether it was EasyTap or MoneyTap, which is also a portfolio company of mine. And so I said, what happens if I put my entire Rolodex and I create a WhatsApp group? So I created this group, which over time is sort of become like a unicorn club. It's very interesting. So we have a very interesting mix of regulators, senior bankers, people from the credit bureaus, and a whole bunch of founders, including very early stage as well as mature founders. So that's sort of like a knowledge group that exchanges a lot of information. And so we've seen a lot of collaboration there, but there are now limitations because, like your namesake, there are only 256 members you can allow, and we are at 253 or something. So that's kind of a challenge. So we're trying to figure out how to kind of open it up so that everybody can participate. And so that's actually worked out nicely for us. Mostly what we have found is founders needing access to APIs and stuff like that. It's not so much between VCs and founders, it's really resources. That's what we found was useful. Like Dilip Asbe, who's the chairman of MPCI, is on the group. So he explains directly in terms of, what's coming down the pipe, for example, because it's informal, it follows these, Chatham rules, house rules, so everything is super confidential, doesn't go out. So he clarifies a lot of things. So we've been wondering how to kind of expand that. Don't have any ideas, but if anybody has ideas, I would love to hear.
I think Vikram, we should definitely chat on that. We would love to support you on that. Fintech.org.
Yeah, sure. The issue is, this Telegram group, I don't know how active are they on Telegram. See, WhatsApp is the operating system of our communications now. So there it kind of works. The moment you take it off that, the engagement will go. So I was thinking maybe Slack or something. I don't know.
Slack would be good.
Yeah, so we're thinking of maybe moving it to Slack where there's no limit issue. So,
but not all of them would be using Slack that much, right? Probably our finance guys or NPCI guys, they will probably not be using Slack.
Yeah, that's the point. Like they come from such different universes, right?
Yeah, yeah.
How do you manage that? That's the thing. But yeah, so that's
needs the business model to charge you for the next 100 users. So
it's not that. It's how do you get past this? WhatsApp is basically the gravitational pull.
Yeah. So if they just said, okay, here's 256 that are free, then start paying for the next 100. I'm sure.
Have they done that?
No, they haven't. They should.
So they have done that. There's a McKinsey group which runs. There are some 600 folks of McKinsey, and I think they have spoken to the Facebook guys to give them some extra permission to add more and more members. We also tried earlier last year. But I think now we have figured out other model to create some sub groups like these to work on that. Yeah.
You can change to a business account. The problem is that if one person for some reason complains, Facebook will shut it down and then there is no recourse. You are talking to a black hole. In fact, the CEO, so Bobby is in the group. Bobby used to run EasyTap, right? He's the WhatsApp CEO, but he said, dude, don't go there. If something happens, I can't help you. I'm just telling you, it's in California. So I don't know.
Yes.
It's an issue, So I don't know. There has to be something, like a community-based thing which has no limits. Something will emerge. So that's what we do on our end.
Unfortunately, we don't have such a wonderful sounding WhatsApp group, although it'll be interesting to hear if you manage to overcome the 256 hurdle. From my side, I'm very happy to chat to anyone we're an impact first investor. And I know that there's an awful lot of training materials around on for the financial side, but sometimes it can be somewhat harder to consider the impact side. So if anyone wants to reach out and discuss that area, I'm very happy to discuss how we look at it. And this is becoming an increasingly complex area, particularly in Europe. So if anyone's seeking European investments, I'm happy to explain some of the nuances of what's going on, although I'm by no means an expert given what a complicated field it is at the moment.
Perfect. I think we're slightly over time, but that's always a good thing. The conversation did not want to stop. And we were really coming into our own. People were starting to ask questions and really talk to each other. Vishal, I know you had a few questions, but a lot of people have to drop off, including yourself. And we'll love to take this conversation forward, either offline or do potentially another couple of sessions, maybe around slightly different themes eventually. But yeah, there's always 256 network, which is not an impediment, unlike what WhatsApp claims it to be. And we're trying to do this more sustainably through people like all of y'all coming together and sharing your experiences and thoughts and knowledge. So thank you everybody for today, and cheers.
Thank you everyone. Thank you everyone joining in.
Thanks, Yash.
Thanks everyone.
Thanks everybody.
Thanks everyone. Bye. Take care.